Hello and welcome to another episode of Full Court Finance here at Zacks. I'm your host, Ben Rains, and today we're going to be discussing all things Nike, with the sportswear giant set to report its Q1 fiscal 2020 results after the closing bell tomorrow, which is Tuesday, September 24th. But before we get into everything, I want to say, remember, if you have any questions or episode suggestions, please feel free to shoot us an email over at podcast@zacks.com. Also, make sure to subscribe and leave a review wherever you listen to your podcasts. And we're going to have a little bit more of a preamble before we get into Nike specifically. So I want to talk more about the overall Q3, what we at Zacks consider the Q3 earnings season, just to give people a sense of what's going on. So along with Nike, we have 8 other S&P 500 members that are scheduled to report their quarterly results this week, which we consider in our September quarter, which is in general Q3. This includes Conagra and Micron and a few other big names. And then overall for Q3 as a whole, total earnings for the S&P 500 index are expected to be down 4.8% from the year ago period on 4.2% higher revenues. So this would come after Q2. We saw earnings climb 0.5% on 4.6% stronger revenue. So we're expecting to see almost a 5% decline at this point, but obviously things could change. These are based just on our overall estimates here at Zacks, with only so few companies having actually reported their results so far. So that gives people a sense of what we're expecting for Q3 to put Nike's growth expectations a little bit more into perspective. And then meanwhile, amid all the ongoing U.S. and China trade war worries, the overall U.S. economy remains somewhat strong at the moment, especially on the consumer and consumer level end. So consumer confidence is relatively high at the moment, which is a good sign for Nike. So September's consumer sentiment climbed to 92 from 89.8 in August, and this is according to University of Michigan data, which is widely cited from places all the way up to the Wall Street Journal and different sites. So this is a relatively accepted source of consumer sentiment overall in the U.S. And then on top of that, U.S. unemployment remains near 50-year lows. And despite some small declines on Monday, all 3 major U.S. stock indexes sit less than 1% off their record highs. So despite all of the worries in these global economic slowdown fears, the U.S. economy seems to be in a good place, as do the stock markets, or as does the stock market at the moment. So now we're going to jump more on to Nike and then its broader industry and some rivals as well. So shares of Nike are up 18% in 2019. This outpaces the apparel market's 12.5% average climb, and Nike stock is now pretty much neck and neck with the S&P 500 so far this year. We should note, however, that both its big German rival Adidas and athleisure standout Lululemon have crushed Nike in 2019, with Adidas stock up 44% and Lululemon stock up nearly 60% at this point. And then over the last 12 months, over the last year, this trend continues, with Nike stock up just around 4% over the last year, compared to Adidas, which is up nearly 23%, which Lululemon's also up at almost that exact same clip. So both those companies are up 23% over the last 12 months, with Nike up just 4%, which is just outpacing the S&P 500 at that time. Well, the S&P 500 is actually only up about 1.5% over the last 12 months. So Nike is above the larger index there at the moment. So with all this in mind, we want to dive into a little bit more of a retail and rival overview. And obviously some of this is going to sound relatively straightforward and simple, but this is the case of what Wall Street and investors are looking at of the retail industry at the moment. So we know that retail, maybe more than other businesses, can be very fickle, but the best firms not only adapt to changing styles and shopping patterns, they help create the innovation and the trends and all of that. So we can see that once powerful and huge department stores such as Macy's and Nordstrom's have seemingly failed to meet investors' expectations during this Amazon age, where meanwhile Walmart and Target, some of the other bigger retail chains, have really proven to Wall Street and those same investors that they are ready to thrive with digital and e-commerce and delivery and all of these buzzwords that have really proved to help these companies recently. And then just to give people a sense that obviously e-commerce and digital and delivery is very important, and it's helped Walmart and Target while it's hurt Macy's and Nordstrom's and some other department stores, that U.S. Census Department data showed that in the first quarter of 2019, that e-commerce sales only accounted for just over 10% of total retail sales in the U.S. And obviously this number has been growing substantially, and it's growing at a much higher clip than the broader retail market. But sometimes I feel like I hate to use the word narrative, but the narrative is that e-commerce is totally now completely dominating U.S. retail industry, but that's not really the case just yet. It's just that it's growing so fast and that everyone doesn't want to miss the train on that e-commerce front. So we should note that, as we talked about, that Adidas and Lululemon have surpassed Nike over the last year, and specifically in 2019. And I want to talk a little bit more about what Adidas and Lululemon have done that maybe Nike hasn't done, because there isn't necessarily, it might seem like Adidas has done something crazy where they've been able to quickly surpass Nike, but that might not necessarily be the case when we dive into a little bit more. So back in around 2013, Adidas had fallen behind Under Armour as the second, or to become the third biggest sportswear retailer in North America, which was hugely shocking because Adidas is on par with Nike relatively on that big global scale. They've been around longer than Nike. They were one of the founders of this whole sports apparel industry, so it was shocking for them. So they needed to make some changes, and Adidas has since then rolled out a series of new offerings over the last 5-6 years. So from retro trends to big celebrity partnerships, and it might sound some people would point to that celebrity partnerships don't necessarily move the needle, but I would say in a case of Adidas, they've made a lot of off the court partnerships with people, with one of the biggest names being Kanye West front and center, and the brand has seemingly been on a tear ever since then. So the German sportswear company poached Kanye West from Nike actually in 2013, excuse me. And then they officially rolled out the first ever Kanye West Adidas shoes in 2015. And if we look at their stock price chart, we can see that basically since the very beginning of 2015, the company hit a year low at that point, and then they've just been on a massive tear ever since then. Adidas stock is up 278% since the start of 2014, with a dip there. And then Nike's only up 117%, so 278 to 117% over the last 5 years. So you can see that they've clearly been able to do something, and this has really helped drive sales in North America. And obviously Adidas has also remained a soccer powerhouse around the world, from South America to Europe. But really it's these off the field styles that have pushed Adidas. They will continue to push Adidas, and they will continue to push Lululemon, which is the other big player in this space that's really burst onto the scene over the last 5 years. Lululemon stocks up 360% over the last 5 years. They've cemented their position as this, you could call it hip, higher end option for yoga and athleisure apparel. The Vancouver-based company is now part of a larger group of companies that are trying to take on Adidas and Nike for that third tier. This includes Puma, but it's really been Lululemon's success, and they've proved to do kind of what Under Armour wasn't able to do when they did briefly surpass Adidas in North America, was to successfully translate its gym focus offerings to the street. So anything that you're wearing to the gym, and I've talked about this before on the show, that you're trying to have not just clothing that people want to wear when they're playing pickup basketball or going to a yoga class, but also want to wear just walking down the street or on a Saturday or anything like that. And so Lululemon and Adidas and Nike have all been able to do that, while you could say Under Armour has not been able to do that. And Lululemon's success has sparked companies such as The Gap and L Brands Victoria's Secret to all roll out similar athleisure and yoga focused offerings. It's also seen newcomers such as Outdoor Voices make some waves in this space. So there are obviously some more direct competition to Nike, you could say, than there has been over the last decade. Within the last couple of years, that players are really starting to push Nike, but Nike's ready to do whatever it can to remain that big sportswear giant, because despite all of Lululemon's growth, the company's only expected to pull in $3.7 billion in revenue this year, which is way less than Nike pulled in last quarter alone. Nike made $10.2 billion last quarter, with their full year revenue up to $39 billion. So that's the scale that Nike's working on, whereas Adidas is also a much bigger company, but it's still a lot smaller than Nike. So Adidas this year is projected to post revenues of roughly $26 billion, with Nike last year at that $39 billion number. So Nike's still a much, much bigger company than even its biggest international rival, which is Adidas. So now I want to move on to Nike's pitch to Wall Street at the moment, and then we'll take a look at some estimates to give people a sense of what to expect from the company going forward. So like everyone else, Nike has pushed headfirst into digital. The Beaverton, Oregon-based company now expects its digital division will make up roughly 30% of total sales by 2023, and this is compared to roughly 15% at the moment. So they're going to try to double that digital business over the next 4 years or so. The company has also invested heavily in supply chain, digital-focused supply chain innovations. They've rolled out RFID tags into clothing to kind of just modernize their whole supply chain and just have more direct-to-consumer business as streamlined as possible. The company also recently purchased, this was in early August, what they call a retail predictive analytics and demand sensing firm, which is, I believe it's pronounced Select, but it's with a C. And they said that that company is going to play what they call a vital role in their broader consumer direct offense strategy going forward. So Nike's really trying to hone in on that digital business, as all these other companies are. And as I mentioned, they've rolled out multiple apps. Their website's more powerful than ever, and they also have a bigger presence than all of these other companies across social media, specifically on Instagram, where people are now shopping directly from that big, ever-growing video and photo sharing app, which is owned by Facebook. But as we mentioned, they're not totally forsaking their brick and mortar business, because we know from the census data that people are still actually shopping in stores as well. So they continue to innovate and modernize stores throughout the world, but they remain focused on places they see to have cultural influence that then trickles down to the rest of the world. So this is why they are focusing on stores in places such as LA and New York and Tokyo and Shanghai, these big cultural hubs that are also just big, massive international cities. And then we talked about how the company has remained on the forefront of fashion in this off the field, off the court style, but they also remain one of the biggest player on that international sports scene. So this is from soccer to basketball, and they actually just rolled out their first ever esports uniforms, and this is a quickly growing segment of the sports world that some people might not even really know exists yet, but it's something we've talked about on the show before, and that's professional gaming, that's esports, and so they're now even getting into that world, which, who knows, down 10 years from now, when esports is the most widely viewed quote-unquote sport in the world, maybe this will be a big, big business for Nike. And then obviously they are the official apparel sponsor of the NFL here in the United States, which, for all the heat the NFL takes, and everyone talks about the ratings, blah, 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 they are still by far the most popular sport in the United States, and the NFL is still the biggest TV product in the U.S. So Nike's relationship there is going to be key going forward as well. And then we should note that their Jordan brand last year was up 21%. So that's a big business for Nike as well. And to put that in perspective, over the last year, their running business was up just 4% and basketball was up 9%. So that Jordan brand was really a standout for Nike last year. And now I want to jump ahead to what to expect from the company in the first quarter of 2020 and then a little bit farther down the line to give people a sense of where Nike might be headed. So Nike's Q1 2020 revenues are projected to climb 5% to around $10.5 billion, and this is based on our Zacks consensus estimates. And we should note that this would come in above Q4's 4% growth, but it would fall below the 3 quarters before that. So just to give people a perspective, we're calling for 5% growth this quarter, which would top last quarter's 4% growth, but it would fall below Q3, 7% growth, Q2's nearly 10% growth, and the first quarter of 2019's, once again, nearly 10% growth. And just to give people perspective, we should note that Nike makes roughly 60% of its sales outside of North America, with around 15% to 20% coming from Greater China, which means currency fluctuations are always something that the company has to deal with and pay attention to. So particularly right now with the US dollar being so strong, this can really impact what Nike's revenue growth looks like. So overall, last year, which was fiscal 2019, their sales jumped 7%, but on a currency neutral basis, those sales would have climbed 11%. So there is a little bit of an impact based on how strong the US dollar is at the moment. And now I want to look at North America and Chinese revenue to give people a sense of where they are in those two, really their most important segments in their whole company. So our key company metric estimates are calling for Nike's North American revenue to climb about 5%, which would fall directly in line with their overall Q1 estimates. This would fall short of last quarter's 7% growth in the region that accounts for about 40% of total revenue. And then meanwhile, in Greater China, the company's revenue is expected to climb 12.5%. And this would also come in, as some might have guessed, below Q4's 16% growth. But it marks double-digit growth in this key region once again. So we're expecting a little bit of a downturn compared to Q4, but some solid top-line growth as well. So I want to look ahead now to 2020. So for Nike's fiscal 2020 revenues, sales are projected to climb about 8%. And then 2021, we're calling for 8.5% growth above that. So 8% growth this year, an additional 8.5% growth in 2020. In both of these estimates would represent larger growth than Nike has posted in any of the last 4 years. So that's the kind of the headline number. If I've rattled off a lot of numbers, and that might be a little overwhelming. But for 2020, so the current year, and 2021, we're calling for higher growth than Nike has posted in any of the last 4 years. So that's a really great sign for Nike going forward. So maybe we could see their stock price start to push up and maybe outpace Adidas or Lululemon over the next several years if this growth really proves to come to fruition. And at the bottom end, Nike's adjusted Q1 earnings per share is expected to climb 6%. And then this would come in way better than last quarter when Nike actually posted a 10% earnings decline, and it also fell short of our quarterly earnings estimates for the first time in years. In looking ahead to 2020 as a whole, we're projecting earnings to climb about 17% and then another 18% in 2021. So this top line growth is followed by really impressive bottom line growth over the next 2 years for Nike. And we should note, as we wrap this up, Nike stock was up about 1.5% through morning trading on Monday to $88 per share, which is just $2 off its 52-week highs heading into its earnings report tomorrow. We should also note that the company does pay a dividend, which Lululemon does not at the moment, as it's still really in its growth phase. It's paying about a 1% yield at the moment, so nothing super high there, but it does pay a dividend. And we should also note that if you're going to listen to the earnings call tomorrow or you're going to read in any more about Nike, we should pay close attention to any digital and e-commerce updates, along with any trade war updates ahead of the vital holiday shopping period. And Nike doesn't actually own any factories, but they do produce about 25% of their global apparel and footwear in China. Last quarter, CEO Mark Parker and other executives assured Wall Street that they don't really expect tariffs to impact their business in any real way. Last quarter on their earnings call, Mark Parker said, quote, "We do not see any impact on our business to date, and we continue to see strong momentum. While it is certainly a dynamic out there with respect to trade, we are relatively well positioned." And then their CFO went on to say that we expect another year of broad-based growth in all four of our geographic regions, delivering on our long-term financial model. So they're not going to really say how much impact they expect, but they're just saying they don't expect anything to turn really bad, which we can see based on our revenue and earnings outlook that the company is actually looking stronger than it has in the last several years. But obviously, these things can change, so make sure you really pay attention to any, as I said, trade war or digital updates tomorrow. And once again, Nike is set to release its Q1 2020 results after the closing bell on Tuesday, September 24th. And make sure you come back to Zach's for a complete breakdown of the sportswear giant's actual results to see what might happen down the road. But that does it for today's episode of Full Court Finance. Until next time, I'm your host, Ben Rains. And remember, if you have any questions or episode suggestions, please feel free to shoot us an email over at podcast@zax.com.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.